Yes. So let's begin the basic concepts where we will understand how to solve total income problem. Remember guys, the first question in the income tax is 15 marks question, descriptive total income problem. By the way, for every 1.5 hour, I will give a small break and I will start a fresh live. Okay. Kindly hook up to this. Mark my word, every mistake that generally you do in exam, I figured out. What are all the mistakes you do in exams? I'm going to rectify all those. Not only that, I'm also going to give you 100% crystal clear clarity in the tax. I always believe in income tax, it's not endless problems that you solve, thousands of problems that you solve, which is important. What is most important is crystal clear conceptual clarity. And also, just initial 10 minutes itself, you will understand, you are going to see so many points that you never observed earlier, that you didn't observe earlier. Getting it? Now, first, remember, you will have, you will have exam at 2 o'clock. At 1:45, paper will be given to you. First 15 minutes, what you will do? Don't scroll the entire paper. No. You know very well, in income tax, first question, 15 marks question is compulsory question. You know very well, that's a total income problem. Read the question carefully. I want every one of you to score 15 out of 15 on the day after tomorrow total income paper. Total income problem, you must score 15 out of 15. For that, what is the technique to be followed? I'm going to answer now. You should also stick to me. Believe me, that 15 marks out of 15 marks, you will write perfectly. You will come back and tell me again below this video that you wrote your best day after tomorrow. Yes. So, in the first problem, total income, by the way, in this first session of live, I am going to cover about default tax regime, alternate minimum tax, surcharge, marginal relief, rebate, agriculture income taxation, tax computation, how to do tax computation also I'm solving, how to calculate unavailed basic exemption, 112 special rates of income also I'm going to solve. Okay. Apart from this, how to solve the total income problem? Look, total income, how to compute? We are going to discuss in heads of income, house, property, PGBP, salary. Now I am talking about the checkpoints in the total income problem. Like, what are the checkpoints? First and foremost question when you're solving a total income problem is identify what question they're asking. Like, you get the question paper right, you see the descriptive right. Of course, MCQ is not open for you. What you have to do in the 15 minutes first reading time, open the descriptive paper, look at the first question, read slowly. Before you start reading, first turn the page, look at what exactly they're asking. Are they asking you to compute total income only, or are they asking you to compute tax liability also? Look at both. Look at this question. At the last, generally you will find, or at the beginning you will find, determine the total income. Like that the question will start with, or at the end of the problem, compute the total income and tax liability they will ask. Once you decide this question, observe it carefully, then identify what is the regime they are asking. 99% of the cases, the question will be based on optional tax regime. Most of the cases, the question will be based on optional, because only in optional tax regime, student can be tested on various adjustments. If it is a default tax regime, many adjustments won't be there because nothing is allowed, right? So that's the reason. First, identify what it is. Sometimes how they will ask you total income question, they will ask you compute total income under optional tax regime, under default tax regime, and suggest beneficial treatment to the SSE. That's how they will ask you. At that time, the problem is going to be little more complex. So identify what regime exactly they are asking. Done? Now you understood? Now come back again. Briefly look at the total income problem. See whether specified business discussion is there. 10AA deduction is there, 80 JJAA deduction is there, 80 QQB deduction, RRB deduction, and you first decide if at all these 5 sections related deduction is there. If at all these 5 sections related deduction is there, how to identify all this? Don't worry, I will have a deductions related revision. There you will get a clarity. So if at all these 5 related, one is regarding royalty, these 2 are regarding royalty income, this is regarding additional employee cost, this is regarding exemptions for specified economic zones, exports related profits exemption, 35 AD, you know very well, 14 specified businesses. Identify if at all this adjustment is there. You know, this hardly takes 2 minutes time. Whatever checkpoints I'm asking you to check right at the beginning itself, it hardly takes 2 minutes time. 15 minutes reading time. I am telling you, you will compute total income fully in your mind. Once 2 o'clock started, you just copy the total income answer what is there on your mind on the paper, because taxation is one paper where time is so tight, because GST, tax, income tax, so lengthy, both are lengthy papers, getting it? So 15 minutes reading time, focus on income tax, solve total income fully. Okay, now look at this. So check 35 AD, all this. If at all any of this is there, immediately you should remember AMT provision is applicable. Further, suppose if at all they are asking you the question only on default tax regime, suppose if the question is only on default tax regime, you need not worry about this. Why? Alternate minimum tax is not applicable when default tax regime is being done. If the question is only on default tax regime, if at all the question is compute total income based on default tax regime, then you need not worry about this particular adjustment. Suppose if the question is based upon, like they asked you, suggest which tax treatment is better, compute total income tax liability under normal tax, under default tax, both they asked you. At that time, you should identify whether these 5 related deductions are there or not. Accordingly, AMT will apply. Remember that. I will discuss what is AMT, when, how to calculate AMT, how to calculate adjust total income, all that. Then you need to come to various checkpoints, which I am going to discuss now. Getting it? Now, first and foremost thing, you know, like, so how to identify, how to, like, what exactly they are expecting from the total income from you on total income 15 marks question, what exactly they are expecting from you. These are the checkpoints which will freeze your mind on how to solve it. Okay, this is the first thing. Second thing, okay, now once you understand what they are asking, now you will start computing the, you know, each head of income, whatever incomes were there. You know, generally total income problems is there, right? This total income problem is generally predominant discussion PGBP will be there. In the total income, predominant discussion is generally PGBP. Sometimes salaries could be the predominant discussion. Salaries could be predominant discussion. Most of the times you see total income problem is PGBP based, like SSC is engaged in business and some P&L account they will give you, getting it? Very rare they will give you receipts and payments account. If receipts and payment account is given, the computation is different, which I will answer in PGBP revision. Okay, right now I am doing you basic concepts plus total income checkpoints related revision. Okay, so PGBP is a predominant. You can see out of minimum 4 out of past 5 attempts, compulsory question is generally PGBP is a predominant testing factor. Salaries is very rare. Of course, salaries is also equally important. If salaries is not asked as part of total income, salaries will be asked as a separate 6 or 8 marks question. Mark my words, salaries is a very important topic, which again I'm going to cover. So PGBP is a predominant testing point will be. Then now, okay, you understood, is it PGBP or salary, whatever it is, you know how to compute each and every head of income. If you did not remember, you have to revise. Don't worry, I am there. I will revise house property, I will revise PGBP, I will revise salaries, everything clearly I will revise it for you. And one more point, very rare, extreme rare scenario, total income problem is capital gain other sources predominant. That is very rare, extreme rare. You don't worry. 99% I'm sure total income problem is going to be business or profession based calculation. Okay, once you computed, for example, let us assume you are computing the total income. You are computing total income. How to compute, as I already told, I will discuss later. Once you computed total income, gross total income, the moment you are reaching to gross total income. Now here one more checkpoint. Suppose they are asking you compute income under default tax and optional tax both. Suppose if they are asking you both, then how you should compute? First you should compute tax. First you should compute income under default tax regime. You compute. When you are computing income under default tax regime, what are the deductions that you will not get? Suppose if the problem is default tax. Again, I'm telling you once again, I'm telling you, because this is the point where many of you confuse. If they are asking you, generally they'll ask both. predominantly they'll ask normal tax regime. Suppose if they're asking you both regimes, first you should compute total income as per default tax regime. When you are computing income as per default tax regime, under each head of income, certain deductions you will not get at all. Certain deductions you will not get. What you will not get? Disallowances under the head salaries. What you will not get in salaries? In my salaries chapter, I have given a clear-cut detailed one, because summary of deductions that are not allowed under default tax regime. Summary of deductions that are not allowed under default tax regime. By the way, this is my new income tax book, getting it, which I prepared it for the May exams onwards. But the syllabus is predominantly same, so don't worry. For you, January attempt, day after tomorrow, whatever is relevant, exactly that tone I'm going to cover. Under default tax regime, certain deductions are not allowed with respect to salaries head of income. What are not allowed? Allowances for Supreme Court, High Court judges, salaries and pensions paid by UNO, allowances to judges, salaries and paid by UNO, they are exempted generally, getting it. But under default tax regime, these are not allowed. These exemptions are not allowed. Rent-free official residence to judge, under optional tax regime it is exempted, but under default tax regime it is not allowed. Very simple. Many students they forget to note this point when they are computing default tax regime. Judges, UNO employees, they will not get deduction under default tax regime. Further, we all know very well, leave travel concession we don't get under default tax regime. HRA we don't get deduction under default tax regime. Special allowances for personal purpose, only clause 2 10 subsection 4 clause 2, only clause 2 related special allowances we will not get deduction with respect to salaries head of income. Only transport element for differently abled, disabled people. Who are disabled people? Blind, deaf, dumb, yes or no, handicapped, nothing but for handicapped people, getting it. Transport allowance alone they will get a deduction. How much deduction? 3,200 per month, up to, remember, how much deduction they will get? Up to 3,200 per month. Transport allowance you will be claimed as deduction for disabled people, differently abled people, getting it. Remaining all other personal expenses, allowances related one, you will not get deduction. Suppose if company gave official allowances, conveyance allowance, traveling allowance, uniform allowance, daily, all that allowances were there, they can be claimed as deduction, whether it is optional tax or default tax, doesn't matter. Up to how much ever employee spends, that much he will get a deduction. Up to how much ever employee spends, that much he will get a deduction. So all special allowances which are personal in nature, straight away no deduction. They are fully taxable. They are fully taxable only for transportation allowance received by blind, deaf, dumb people. Only for them up to 3,200 rupees per month they will get a deduction under default tax. Remember, these are all you will not get deduction on default tax. Further, under section 16, entertainment allowance, of course entertainment allowance is there only for government employees. It is not there for anybody. Deduction is not there for anybody. Once you receive entertainment allowance, it is first taxable under salaries, then deduction can be claimed by government employee. That deduction under default tax regime is not available. Further, profession tax paid deduction is also not available for default tax regime. Then exemption for free food up to 50 per meal. Remember, employer giving employee free food up to 50 rupees per meal, the voucher is exempted. That exemption is not there in the default tax regime. These are all the exemptions and deductions and benefits that are not available under default tax regime. If at all you are having any confusion, once again play back the video. I'm proceeding further now. So that's it. I have clearly given in the institute book or any book you see under default tax regime, only these points they will cover. Actually salaries related so many were there which generally they will not list in the DTR provision. So that's why I always give at the end of each chapter what will not be coming under default tax regime exactly. Then coming to under house property, only one disallowance, that too for which type of property? Self-occupied or unoccupied property where NAV is equal to 0 benefit is claimed. Remember, it's not straight away self-occupied. Self-occupied or unoccupied property where NAV is equal to 0 benefit is claimed. We all know net annual value will be nil for any two properties. What are the property natures? Either they should be self-occupied or they should be unoccupied. Unoccupied means what? SSC is not occupying the property because he is residing at some other place. He is staying at some other place because of employment. In a rented house he is staying because he don't have a own house there. So that is called unoccupied. Either self-occupied or unoccupied. Nothing but in the entire 12 months, one day also we should not rent. One day also we should not rent. Then only it is called as SOP or UOP. That too, for how many houses an SSC can claim NAV is equal to zero benefit? Only 2 houses. Suppose if SSC is having more than 2 houses which are self-occupied, which are unoccupied, any 2 houses he will claim SOP, unoccupied property, NAV zero benefit. The remaining house is called as deemed let out property. And for deemed let out property, this disallowance under default tax regime will not apply. Remember this, mark this point in your mind. If a deemed let out property is there, basically deemed let out property is self-occupied. But since we are paying tax on it, annual value we are computing, this disallowance, interest on self-occupied party, disallowance under default tax regime will not apply. Please remember this point. Getting it? Disallowance for interest, when it will apply? Only when it is only when the property NAV is equal to zero benefit is claimed. When we can claim benefit? Not even one day it should be rented. No benefit you should get. Only benefit is you are staying in that house or it is empty throughout the year. That's it. This is the disallowance. Under house property, interest on loan for self-occupied you will not get. But for deemed let out property, you will get unlimited interest deduction. Remember the word unlimited interest deduction under default tax regime for let out property, deemed let out property. Correct? Further, under default tax regime, with respect to house property, if you are having any loss, you cannot set off that loss under house property with other heads of income. With other heads of income, house property loss you cannot set off. Getting it? Further. Are you clear until now? Yes. Next. So disallowance under salaries we covered, disallowance under house property we covered, disallowances under PGBP. What are the benefits SSC should forego? What are the benefits SSC should compromise, should sacrifice? If at all he want to pay tax under default tax regime, under PGBP, additional depreciation you will not get. You will not get additional depreciation. You will not get deduction for scientific research expenditure. By the way, under 35, no deductions only. The restriction is only for what? Very important point. Contributions only. We all know under 35 subsection 1 and subsection 4, that is different. 35 subsection 1 clause 2, clause 2a, clause 3, 35 2aa, these are different. Why? In 35 subsection 1 clause number 4, SSC directly spending it, revenue expenditure, capital expenditure, that he will claim deduction. He will get deduction for that, whether it is optional tax regime, default tax regime, doesn't matter. He will get deduction for that. For what scientific research related he will not get deduction? He will not get deduction for contributions. What is it? Contributions he will not get. Like business SSC, no, he will donate to some scientific research association, right? Social associations, right? Social research for statistical research, right? National laboratory, IIT, universities. Yes, remember that he will not, that we cannot claim deduction. We cannot claim deduction for donations for scientific and social. We can claim, remember, we can claim deduction even though we are directly incurring. If you directly spend, no restriction under default tax. If you're donating, you can't claim deduction for donations. Yes or no? Then 35 AD, you cannot claim deduction. 10 AA, you cannot claim benefit. Tax holidays, special economic zone, export related profit, no benefit at all. These are the disallowances under PGBP. Under other sources, only 2 disallowances were there. MPs and MLAs, no, they get some allowances, right? Daily allowance and constituency, like the constituents where they win no election. That one, constituency elements, that and all, they will not get deduction. But under optional tax regime, they can, that is exempted fully. But under default tax regime, exemption is not available. And clubbing related provision is there, right? When minor income is clubbed in the hands of the parents, yes or no? Under 64 clause 1a, 64 clause 1a, or you can call it a subsection 1a, it is clubbed in the hands of the parent whose income is higher, right? Yes or no? Yeah. So when you are clubbing, no, 1500 benefit you can claim. That is not available under default tax regime. Remember this. But one more point you should remember is 10 subsection 15. 10 subsection 15. Many students confuse. Post office savings interest is there. Up to 3,500 exempted. No. That is eligible whether under default tax regime or optional tax regime, doesn't matter. Only two items, 10 subsection 32, 10 subsection 70, MP's MLS point, minor point. Under other sources, only these 2 points were having some restriction under default tax regime. Are you clear? Next, chapter 6A. You will not get chapter 6A deduction at all. Only 2 deductions. Only 2 deductions SSE can get, even though he is declaring income under default tax regime, paying tax under default tax regime. Only 2 chapter 6A deductions he will get. 3 deductions he will get. 80JJAA. What is it? 80JJAA. 80CCD, not fully, only subsection 2, employer contribution. Remember this. This is employer contribution to national pension scheme. Then 80CCH subsection 2, central government contribution to Agnipath Corpus Fund on behalf of Agniveer. These two originally will be taxed as salary in their hands. Then they can claim deduction under chapter 6A under subsection 2 and under 80CCH subsection 2, 80CCD subsection 2. How much they can claim, we will discuss in the deductions chapter. Are you clear? If you observe, under default tax regime, no provisions related to capital gains were discussed. So capital gains is not at all discussed under default tax regime. Then coming to, we know very well, some law, these deductions were there, right? Related to them, if any brought forward and set off of losses is there, related to this, any brought forward losses is there, we cannot set off with the current year income, because these are all disallowed allowances, disallowed items related deduction. So you cannot set off. Getting it? Now here many students are having one doubt. Sir, under default tax regime, under house property, mine is a let out property, sir. Let out property related loss is there. We know very well, for self-occupied property, no loss is possible. Why? Interest you cannot claim deduction under default tax regime. But let out property, interest whatever is there, you can claim deduction. Then balance will be, if at all, loss under house property. You cannot set off with other head of income, correct? But you can carry forward. In the recent one of the MTP, house property loss cannot be carried forwarded. Like that they gave an answer. In the ICAI book also at one place, corrigendum, you cannot carry forward, something is given. That's a wrong answer. House property loss for let out and deemed let out property, if at all under default tax regime, the result is a loss. You can't set off with other head, but you can still carry forward for next 8 years, because it's very simple logic. If a deduction is allowed, carry forward is permitted. If deduction itself is not allowed, the question of carry forward itself will not come into picture. Very, very important point. Further, under default tax regime, maximum depreciation is restricted to 40%, and you will not get deduction for any allowance, any perquisite under any other law. That's why in salaries 50 rupees, judges, accommodation, that and all I told. Then additional adjustments, this is not that required, this is not that important. Okay, and you all know, I guess you know very well regarding when SSE should opt for default tax regime. At the time of filing IT return, non-business SSE. Suppose if the SSE do not have business income, profession income, he can claim every year whatever is beneficial is there, normal tax regime, default tax regime, whatever is beneficial for him, he can claim that particular mode. Suppose if it is a business SSE, on or before due date you have to claim. Once exercised, subsequent years also it is applicable. Later if you want to withdraw, you can withdraw. You can withdraw. But once you withdraw, first you declare default tax regime. For example, you declared for the first time you are declaring under default tax regime. You declared. Later you withdraw. Once you withdraw, in lifetime you cannot claim default tax regime unless business itself is not there. Suppose if at all your business is discontinued, no problem. You can again come back and claim optional tax regime. Business SSEs, it's one time only you have to choose. Once you choose and you stick to it. If you withdraw later after choosing it, you can never touch, you can never get back to default tax regime. Now, by the way, major provision of default tax regime I completed. By the way, one more point, if at all you are paying tax under 115 BAC, if at all you are computing income under 115 BAC and paying tax under 115 BAC, alternate minimum tax provision 115 JEE, 115 JC, these sections will not apply. Clear, all of you? That's it. Now, what is the tax rate under default tax regime? Actually, here I have given tax rates, but this is applicable for May 25 onwards. So this rate don't look into. If at all, even if you see this, ignore it. What are the tax rates under? What are the tax rates per under default tax regime? Very simple. What are the tax rates? You know, up to 3 lakhs, up to first 3 lakhs 0, 3 to 6 lakhs 5%, 6 to 9 lakh 10%, 9 to 12 lakh 15% is the tax rate. 12 to 15 lakh 20% tax rate. More than 15 lakh straight away flat tax rate is 30%. These are the slab rates under default tax regime. Remember, these rates are applicable whether you are a normal citizen, senior citizen, super senior, doesn't matter. Whether you are a resident, non-resident, doesn't matter. For all of them, basic exemption limit under default tax regime is only 3 lakh. Further, remember, under default tax regime, special incomes are taxable at special rates itself. Are you clear? I hope until now you got some clarity on what is default tax regime. One request here, if possible, if your friends are also there, share this video link to your friends also. Definitely, I think by this time you would have understood how much clear I am covering in the marathon itself, where you will I will pinpoint every mistake that you're doing. Still, it is not over. Total income problem solving is not over. Now, again, what are we discussing actually? We are discussing solving of total income. So, if at all in the question, no, you should solve total income under optional tax regime, default tax regime. Both they are saying you at the time, first compute income as per default tax regime. Just now I covered default tax regime. How to compute income? Take all incomes except those deductions. Reduce all deductions except what are all the disallowances I told you, don't reduce them. Compute gross total income. You know, less chapter 6A. Only 3 deductions: CCD subsection 2, CCH subsection 2, Agnipath contribution, national pension contribution, employer related, Agnipath central government related, JJAA additional employee cost related. Deduct these 3. Then you will get total income, right? Yes or no? Now, how to compute income under optional tax regime from this total income? Take the total income as per DTR minus the additional depreciation applicable. Each head of income, salaries related information, anything we disallowed, check it out, allow it. Anything we disallowed under PGBP, allow it. Anything we disallowed under house property, only self-occupied. Suppose if self-occupied is there, interest on loan is there, allow it. Remember, for house property, maximum deduction for interest is what? Per SSC. It's not per house, it's a per SSC. I may have 2 self-occupied properties. For both put together, maximum interest I can claim deduction is how much? 2 lakh or 30,000. 2 lakh is applicable when if the loan is borrowed for purchase or construction. 30,000 limit is applicable when if the loan is borrowed for other purposes, repair, renovation, reconstruction, whatever, other than purchase, other than construction, limit is 30,000. So see whether interest on housing loan is there, self-occupied property, check out in the question. If it is there, reduce it now. Compute the interest, reduce it now. Then reduce PGBP related additional depreciation, 35 AD deduction if available, 35 contributions if available, reduce it. Chapter 6A, reduce it. Then you will get total income under normal tax regime. Correct? Everyone? Now here very important. When you are computing total income like this, you should not directly reduce chapter 6A. You started with what? Total income as per default tax regime. Look at this. Suppose you started, first you computed what? Total income as per default tax regime you started. Correct? You computed minus what you have to do? Salaries related deductions which you did not claim. In default tax regime, reduce it. PGBP related deductions which you did not claim in default tax, reduce it. Other sources related which you did not claim, reduce it. House property, self-occupied property, interest deduction if at all there and you did not claim, reduce it. Then what you will get is actually gross total income. Remember here one more point, if minor income is clubbed, no, 10 subsection 32, that 1500 also you have to reduce it. This point many students forget if it is there. Okay, then you will get gross total income. Now reduce chapter 6A deduction. Now remember, whenever you are reducing chapter 6A deduction from gross total income, whenever you are reducing chapter 6A deduction from gross total income, by the way, even when you are computing total income here, this total income under DTR means what? Gross total income under default tax regime minus chapter 6A. What chapter 6A? 80CCD subsection 2, 80CCH subsection 2 and 80JJAA. Only these 3. Yes or no? Gross total income, some amount. This is some amount. You will have some net income. Before you reduce it, remember, under optional tax regime, under optional tax regime before reducing other chapter 60 deductions like ATC, ATCCD subsection 1, ATCCD subsection 1B, ATCCC, ATD, ATDD, ATE, EE, EEB, all that. Okay, before reducing all that, under default tax regime before reducing these three, gross total income one major checkpoint. Gross total income one major checkpoint. What is the checkpoint at gross total? You see here I have given almost 7 checkpoints here. What is it? The moment you come to gross total income, there is a checkpoint. What is it? Look at the composition of gross total income. Look at the composition of gross total income. What is the composition of gross total income? Just a minute. Okay, I'm just going back. Now once you come, the gross total income which you computed under default tax regime, normal tax regime, whatever it is, split that income into 2 parts. Before reducing chapter 6A, this is a rough calculation in your mind. Remember, this is a rough calculation in your mind. What are special incomes? What are normal incomes? Identify. Special incomes means what? Special incomes means 112A, long-term capital gain on listed shares, listed securities other than units. Okay, where listed equity shares, more specifically speaking, listed equity shares, listed equity oriented mutual fund, units of business trust. Yes or no? 112A. Then 112, remaining all other long-term capital gains. Then 111A, same, whatever list is there under 112A, corresponding short-term capital assets 111A. For all of this, the criteria is what? Except business trust units, except business trust units, equity oriented mutual funds, listed equity shares, zero coupon bonds. For all these three, 12 months is the holding period criteria. But remember, zero coupon bonds is not covered under 112A. 112A, what assets are covered? Listed equity shares, listed equity oriented mutual funds, units of Unit Trust of India, units of business trust. Only 4 units of business trust. 36 months is the criteria. Remaining assets 12 months is the criteria. If the holding period is more than 12 months, 112A is applicable. If the holding period is less than or equal to 12 months, up to 12 months, then 111A is applicable. As then we have special incomes. 115 BB or BBJ. This is what we call it as winnings. Now this gross total income, let us assume 10 lakhs is there. Let us assume 10 lakhs, or else let us assume 20 lakhs is there. Out of this gross total income, you know very well how much is 112A income? 4 lakhs. Let us assume, example, 4 lakhs. How much is 112? 2 lakhs. How much is 111A? 3 lakh. How much is 115 winnings and all? 2 lakh. What is this total? 4 plus 2 6, 6 plus 3 9, 9 plus 2 11. Oh, special incomes are 11 lakhs totally. Remaining balancing figure is called as normal income. Remember, under chapter 6A deductions, total deductions under chapter 6A, if it is default tax regime, only 3 sections: ATCCD subsection 2, ATCCH subsection 2, ATJJAA. These 3 sections of total put together cannot exceed 9 lakhs. Correct? Suppose in some problems, this amount is some 2 lakhs only, but chapter 6A will be 3 lakhs. Student, what he will do, since gross total income is bigger amount, he will directly reduce chapter 6A. Total income answer is wrong, tax amount is wrong, AMT is wrong, every answer is wrong. One checkpoint: your chapter 6A deductions cannot exceed, normal incomes, whether it is a default tax regime, whether it is an optional tax regime. This is the first checkpoint. Got clarity? Yes. Now the second checkpoint, when you are solving total income problem, major checkpoint I covered, introduction I covered, how to solve this I covered. Getting it? So once first checkpoint is over, then second checkpoint. Once you understood gross total income minus this checkpoint, now you arrive to what? Total income logic. Now on total income you should compute tax. Correct? Now how to compute tax on total income? This is the question. How to compute tax on total income? Just a minute. So how to compute tax on total income? Now look at first, always you are computing, first you are computing default tax regime income, then you are computing tax. In exam, how you should present, total income under DTR, then tax on that. Then you should start total income under optional tax regime, then tax on that. Getting it? Now I am telling you total income under DTR I told you, and how to arrive normal tax regime also I told you. Now let us understand tax computation. Let's understand tax computation. Now total income is there, right? this total income split into two parts. By the way, I am computing tax under 115 BAC. 115 BAC is applicable for which assessees? Individuals, HUF, AOP, BOI, artificial judicial persons. For all of them it is applicable. Once you computed total income, split the total income into two parts. For tax computation, split the total income into two parts. A same special incomes. What are the special incomes? 115 BB, winnings, BBJ, law, all that. 112A, 112, 111A. Now this total income, some 15 lakhs is there. Allocate here. What are all the actual amounts is there? Allocate, because you already computed. Balancing figure is what? Normal rates. Now normal rates means what? Slab rates. What are the slab rates? Just I told you. Correct? Now most important adjustment, most important checkpoint. What is the next checkpoint? What is the next checkpoint? Take agriculture income. Before you compute tax here, see whether agriculture income is there. This you splitting you are doing, right? Don't do it. This total income is there, right? See whether in the question agriculture income is there, because you claimed exemption already. Agriculture income, how much you look into. If agriculture income is there, then basic tax. You know how to compute tax? First you should always compute basic tax. You see, I have given you here the format. How to compute total income, I have given the format. Always follow the format, always follow the process. Your answer will always go correct. Many students will do mistakes because they don't follow the format. Getting it? Basic tax. What is the basic tax? First figure out, first calculate. How to compute this basic tax? Suppose if agriculture income is there, how to compute this basic tax? I will come back to it 1 minute later. First always compute basic tax, then add surcharge. Then add surcharge. Surcharge is at applicable rate. At what rate? I will tell you. Then you will get some subtotal. Basic plus surcharge subtotal. From that, either rebate will apply or relief might apply. Marginal relief, reduce it. Then you will get again subtotal. On that add says this is the final answer. That's it. Tax computation always follow. First basic tax you should compute. Then surcharge. Basic tax when you are computing, see whether agriculture income is there. That's the checkpoint. If it is not there, happy. Straight away compute. Basic tax over. Then add surcharge. Look at the total income. Default means default tax regime total income. Optional means optional tax regime total income. Accordingly decide the surcharge rate. What is the surcharge rate? What is the surcharge rate here? I have given you a minute. Just a minute. So heavy. Yes, surcharge rate. What is the surcharge rate? Under default tax regime, what is the rate? Under optional tax regime, what is the rate? Getting it? I'll do one thing. First basic tax computation, let's finish and then get back to this. Okay, basic tax computation. If agriculture income is there, what we need to do? Then first total income. Step 1, how to compute basic tax? How to compute basic tax is the question. Suppose if agriculture income is there in the question which you claimed exemption, total income plus agriculture income, how much? Revised income you will get. On this you should compute basic tax. Now this you split. Special income how much? Balancing figure. Generally balancing figure will contain your normal taxable total income plus agriculture income will be there. On this apply slab rates. Step 1 you will get. Step 2, what is the basic exemption limit plus agriculture income? On this directly apply slab rates. Directly apply slab rates. Basic exemption plus agriculture. Directly apply slab rates. In step 1, total income plus agriculture income, you will get revised. No, directly you should not apply slab rate. That's wrong, because total income of the SSE means what? Special incomes also there. So careful, be careful. Whereas in the second case, basic exemption plus agriculture means special incomes point is not there. Directly slab rate. Then step 3, step 1 minus step 2. If it is positive, that is the final basic tax. This is not final tax liability. It is final basic tax. Final basic tax means what? In our format, you have to substitute. Now you computed basic tax. Okay. Understood? If agriculture is not there, 3 steps logic does not apply. Basic tax 3 steps logic does not apply if agriculture income is not at all given in the question. Getting it? Then add surcharge. What is the rate at which surcharge has to be added? Now look at this beautiful logic I'm going to tell you. Marginal relief logic I'm going to explain you on the surcharge. Marginal relief logic I'm going to explain you. Now, okay, see, don't worry. Actually, this is some students are asking where this PDF we will getting it. At the last moment, do not change your PDF. listen to this video only for getting clarity. Whatever book you're following, just follow that book. That is why I'm showing you and writing everything as much as possible. Getting it? Once the chapter is over, once this topic is over, basic concepts, I will give you some 15 to 20 minutes or half an hour break. Then we will begin residential status. Half an hour residential status. Then again I will give you from 15 to 20 minutes break. Again we will start house property, then PGBP, then salaries. Then in the next tomorrow's class, probably salaries also I will discuss tomorrow only. So PGBP I will cover by end of the day. By tonight 12 before itself we will complete PGBP also. Now just 1 minute. I'm already seeing so many are commenting. Just a minute. Let me see the comments. Winnings means lottery income only. Somebody is asking, is lottery normal income? No, it's a special income. Winnings, horse races, everything is a special income. Once this tax computation is over, charge, margin relief, then agriculture income logic I will discuss. Agriculture income, what is agriculture income? Rule 7, 7A, 7B, rule number 8, all that I will discuss. Okay, 1 minute. Somebody is asking, are you in live in really? Of course, man, I'm in live really. Yeah. Somebody is asking surcharge on lottery income, how? That also I'm going to cover. Yes. Now, let's look at surcharge related applicability. Now, first to know, you compute a total income, right? Look at the total income. First, whatever total income you computed, look at the total income. Look at the total income. I hope you are all able to listen. Yeah. Look at the total income. First, whatever total income you got, DTR, optional, whatever it is, look at the total income. Is it less than 2 crore? Check out. First checkpoint here. Less than 2 crore, check out. Happy, less than 2 crore. No need to worry. First and second case will apply. What are they? First and second case will apply. Look at the total income, including dividend income, capital gains 11A, 111A, 112, 112A. Remember, including, nothing but including word you can leave it. Entire total income. Just to check entire total income. Is it less than 2 crore? Yes, sir, it is less than 2 crore, sir. Is it more than 50 lakh? Yes, sir, it is more than 50 lakh, but not exceeding 1 crore. Basic tax we computed, right? On that, 10% you apply one more tax called surcharge. Under the default tax regime, under optional tax regime, the tax rate is 10%, 10%. Suppose no, total income. Total income is total income. Dividend, triple, ignore all that. Is the total income less than 2 crore? Yes, sir, it is less than 2 crore. Total income is less than 2 crore. Then apply surcharge at 15 and 15. Over, done. Suppose your total income answer is more than 2 crore. Then you should stop immediately. You should not straight away apply the surcharge rate. If your total income as per your answer is more than 2, wait. Now eliminate 4 incomes only. What are they? Dividend, 111A short-term capital gain, 112 long-term capital gain, 112A long-term capital gain. Eliminate these 4. Remember, many students by mistake they eliminate lottery income, winnings income, card game, puzzles, betting. Never eliminate that. Income from race horses, that also don't eliminate. Lottery and all don't eliminate. Only 4. Dividend, 111A, 112, 112. Only these 4 you eliminate. Now see the total income. Still more than 2 crore. Still more than 2 crore. But not exceeding 5 crore. Then surcharge rate. Listen my word carefully. Surcharge rate on tax component. Surcharge on tax component. Other than surcharge on tax component. Other than dividend related tax, other than long-term capital gain tax, other than short-term capital gain tax, 111A, other than those 3 taxes, what is the remaining income related tax liability identify? On that surcharge rate is 25. Very simple. Very simple. Okay. Very simple. So what am I asking? Okay. What am I asking? You are computing basic tax, right? Okay. In basic tax, what you will have LTCG 112, 112A, 111A, dividend related tax. Okay, 111A we know 15%. 112A minus 1 lakh after exemption, remaining gain is 10%. 112 20%. Dividend, what is the tax amount? Generally you compute tax rate. All normal incomes you compute at slab rate, right? You will get some tax, right? This tax divided by normal income, you will get average rate. Dividend income, in the question, multiplied by average rate you apply. Then dividend related tax you will get. What is the logic? On the remaining normal income or lottery income, remaining lottery income will be there. Normal income slab rates, lottery income some 30% tax rate. Okay, you will get some basic tax here, right? For this 25% surcharge, for this 25% surcharge. Whereas for LTCG you will compute some tax rate, surcharge is 15. For 111A some tax is there, right? Surcharge is 15. 112A, 111A some tax is there, right? Add surcharge at 15. Dividend related average tax portion is there, right? On that add surcharge at 15. That's it. Sir, what about lottery income related basic tax? On that surcharge is what rate? 25% only. If total income is more than 2 but not exceeding 5 crore. That's it. I think I have given you clear clarity. Once again repeat. If you do not understand, once again repeat the video. Suppose if a total income is crossing 5 crore also, under optional tax regime, I told 25, right? Wherever 25 is there, it is 37. Whereas under default tax regime, it is same 25. No changes at all. The logic is very simple. Rate of surcharge shall not exceed 15%. Rate of surcharge shall not exceed 15% for dividend, capital gain, all this. Dividend related tax, capital gains, 111A, 112, 112A. Only for this, surcharge rate can be either 10 or maximum 15. Whereas remaining incomes, lottery, other casual incomes, they are liable for surcharge depending upon the 1, 2, 3, 4 category, either 10, 15, 25, 37 as the case may be. Getting it? Suppose my total income is more than 2. Look at this scenario careful. My total income is more than 2. The moment it is more than 2, what I should do? Exclude dividend, exclude LTCG, exclude STCG 111A, yes or no? Then I should see if it is less than 2. Originally more than 2, but after reducing dividend, LTCG, STCG 111A, it is less than 2. Which means I will come under 5th category. Straight away surcharge on every income is 15%. Surcharge on every basic tax of every income is what? 15%. That's it. Easy. All of you. That's it. Now, so again, we understood right now what is basic tax and what is, we understood right now what is basic tax and at what surcharge to be applied, we understood. Remember, under default tax regime, maximum surcharge rate cannot exceed 25%. That's it. Then you should reduce what? Marginal relief. How to calculate relief? Relief will be coming into picture. I have given you 3 steps. Very simple. Relief will come into picture. I can tell you the logic also, but I think it will take time. Considering the time available, I am not going to discuss about the logic. Very simple. Very simple. Step 1. When you are computing relief, always step 1. Compute basic tax. Tax means what? Basic tax on whatever total income is there. How to compute basic tax on total income? You already computed. Basic tax, total income, special incomes, normal incomes, you computed already. Tax alone I'm talking about. Then add, for example, surcharge rate is 15, then add surcharge. Then step 2. Here since total income is exceeding 1 but not exceeding 2. That is the reason why we are calculating relief. Then compute tax on 1 crore plus, compute tax on 1 crore plus 10% surcharge. Here actually 2. Okay, just a minute. Yeah. So 1 crore but not exceeding 2. Then compute tax on actually 50 lakh. It's actually what? Just a minute. I think a small mistake is there here. Compute basic tax. Suppose if total income is exceeding 1 crore but not exceeding 2. Yeah. Because if it is crossing 1 crore, what is the tax rate applicable? What is the surcharge rate applicable? 15. Suppose if my income is exactly 1 crore, If my income is exactly 1 crore, then surcharge rate is only 10%. That's what. So tax compute on 1 crore, surcharge at 10% plus total income minus 1 crore. Here the logic is very simple. The logic is, if my total income crossed so and so limit, either I am liable for surcharge or I am liable for a higher surcharge. Because of that additional income, if at all I am liable for surcharge, what is the surcharge tax and basic tax extra I am liable? Simple. Because of extra income I am getting, how much extra tax I am getting? That is the main logic you should see. If at all the extra tax liability is more than your extra income, if the extra tax liability is more than your extra income, that difference is given to you as a relief. I think actually I have made a very detailed video on relief. If at all any of you are having a doubt, you just type in the YouTube itself, see a Harsha, a surcharge calculation, relief calculation, you will get a detailed video. If at all you watch that, you will get 100% clarity. I don't want to waste others' time, especially those who are waiting here. Getting it? That's it. So it is very simple. If additional tax liability is more than additional income beyond a particular threshold limit, if the additional tax is more than, additional tax plus surcharge is more than the additional income plus surcharge on that, whatever it is at a lower slab, that difference is actually given to you as a relief. Okay, you can actually go through that. I will do a separate video on it. If possible, I'll do a separate video. Let me cover agriculture income related discussion. Getting it? Just a minute. Students, are there anybody asking for surcharge? Surcharge for dividend, I told you. Somebody is asking surcharge for dividend. Yeah, I clarified it. Under default tax regime, once income crosses 2 crore, it doesn't matter whether your income is more than 2 or more than 5. Doesn't matter. It's always 25% is the maximum surcharge rate. That's it. Yeah, this is absolutely correct. This format is absolutely correct. Not an issue. Here alone there is a printing mistake. 2 crore it should become. It should come. Okay, well, small mistake, it's okay. But in our way, always in our class we compute in a different way. We don't use much these steps. We use a logical steps. Getting it? We just compute basic tax. We just tell logically how to solve this problem generally. Yeah, that's okay. Next. Okay. Yeah. I'm proceeding. I hope nobody is having any problem with respect to surcharge computation margin. If somebody is asking marginal, if I'll do it. Yes, I think nobody is asking as of now. As of now, nobody is asking. Yes. Just a minute. So now again, coming back to our discussion. Total income problem. You see, we completed 50 minutes. Okay, we discussed within this time salary default tax regime is over, all that is over. Now coming back. So you computed tax. Default tax regime is there, you computed tax. Correct? Tax computation we understood. Surcharge adding minus marginal relief I told you. Now let us understand rebate also. Let us understand rebate. Rebate under section 87A. What is it? Rebate under section 87A. Just a minute. Rebate under section 87A. What is this rebate under 87A? Under normal tax regime, what is a rebate? Under default tax regime, what is a rebate? Under default tax regime 115 BAC, how to calculate? Normally, how to calculate? Under normal tax regime, rebate you will get only if total income is not exceeding 5 lakh. Whereas under default tax regime, if the total income is not exceeding 7 lakhs, you will get a rebate. Under default tax regime, you have a rebate of 25,000. Under normal tax regime, you have a rebate of 12,500. Whether it is optional tax or default tax, it doesn't matter. 112A related tax portion is there, right? No rebate on that. 112A related long-term capital gain tax is there, right? On that, no rebate at all. So first to compute basic tax, some amount you got. Look at the total income. Total income means excluding agriculture income, but including all incomes, you check it out. Is it less than or equal to 5? Yes, sir. Up to 12,500 you will get. By the way, 87-day rebate is only for resident individuals. Only for whom? Resident individuals, the rebate will be applicable. Now, coming to default tax regime, I think this is clear. Up to 12,500 you can clear. Can you solve problems at the end? Sanjay is asking. I will think about it. Maybe 1 or 2 problems. Recently I uploaded MTP1, MTP2 September 24 related first total income. One of the toughest problem in the CNT. That also I uploaded, solved. If possible, do that. I did bit speed only. It's like a revision only. September 24 related caramharsha January 25 MTP video will be there. Inside that itself timestamp will be there. September 24 attempt total income suggested answer is solved. That you can see. MTP1, MTP2 also total income problem is there. That also is solved for your reference. I'm telling you. You can watch that video. 3 problems will be there. If you open September 24 MTPs, 2 problems will be there. If you open May 24, 2 more problems. So almost 7-8 problems of total income I have already given. Okay. Next. So compute it. Now, so this is rebate under optional tax regime 87A. What about default tax regime 115 BAC? If the total income is not exceeding 7 lakh, up to 25,000 you can straight away reduce. Simple logic. Up to 25,000 you can straight away reduce. Sometimes no, SSC total income might be crossing more than 7 lakhs. SSC's total income might cross more than 7 lakhs. That time, how to calculate rebate? Step number 1. Total income minus 7 lakhs, how much? For example, no, SSC is having exactly 7 lakh 10,000 income. Total income is 7 lakh 10. Arre, just because of this 10,000, what happened? 25,000 worth of rebate he lost. But under default tax regime, similar to margin relief for surcharge is there, right? Similar concept is there. First calculate how much is the extra income he has? 10,000. Okay. Step 2. On 7 lakh 10,000, how much tax is coming? Just calculate. First 3 lakhs 0. 3 to 6 lakhs at 5% is equal to 15,000. 6 to 9 lakhs. Oh, 3 to 6 means 6 to 9 means what? Only 1 lakh 10,000 is there. Correct? Which is taxable at 10% is equal to 11,000 is there. Oh, so total how much? 26,000 is the basic tax. Oh my God. On 7 lakh 10,000, SSC has to pay right now how much? 26,000 rupees basic tax. Tell me logically, if I do not have this 10,000 rupees extra income, my tax is 0. Just because this 10,000 is there. Department is asking me 26,000 rupees tax. What is better deal for this? I will go and tell the department, don't ask me this. My 10,000 extra income is there, right? You take it. You take extra 10,000 if you want. Don't ask me 26 because as per this, my basic tax is 26,000, but my income is only 10,000. You are asking me 26. You are asking me 16,000 rupees unnecessarily. That's it. 16,000 is the rebate. So step 2, compute tax on total income, basic tax as per default tax regime. Step 1, total income minus 7 lakhs. You do it. Step 2 minus step 1 if it is positive. Step 2 minus step 1 if it is positive. Rebate under 87A is there. That's it. These steps will be applicable when if the total income crosses 7 lakh. Suppose if the SSC total income is less than or equal to 7 lakh, straight away up to 25,000 rupees worth of basic tax, you can reduce it. But when you're reducing from basic tax, on the basic tax, 112A related tax, how much you see? Other taxes, how much you see? Because 112A tax is not eligible for rebate. Getting it? Be careful. That's it. I think everybody got it. Yes. Casual income. That's it. There is nothing. Somebody is asking. There is no rebate on casual income. That's wrong. Rebate is there on every income. Only 112A income is not applicable. On every basic tax component, whether it is a normal income, a capital gains, a lottery, a winning, that doesn't matter. 112A alone is not eligible for rebate. Getting it? That's it. Next. Thank God, until now we have computed. Now we understood normal regime, basic tax computation, agriculture income, surcharge and marginal relief, 87A rebate, everything we understood. Default tax regime, how to compute income, we understood. How to compute basic tax, we understood all that. Now let's come back to how to compute income under normal tax regime. Take total income as per default tax regime, just I already covered previously, minus PGBP deduction, salaries deduction, other sources deduction, house property deductions, which we did not reduce earlier. Reduce it. You will get gross total income. Then reduce remaining chapter 6 deductions. Remaining means what? Already 80 CCD subsection 2 you reduced. The CCH subsection 2 you reduced. 80 JJAA you reduced. Remaining you reduce it now. Remaining you reduce it. Reduced. You will get total income as per optional tax. As usual, basic tax you compute, surcharge you compute, relief and rebate you compute, everything is over. Okay, compute the normal tax. Over. Now look at the total income once again. Look at the total income under optional tax regime once again. Total income. See in the question whether 35AD all this is claimed. Actually, no, if 35AD and all is there, na, DTR will not apply. I mean, if at all DTR is claimed, 35AD and all does not apply. See whether 35AD and all sacrifices are there. Yes, it is there. Yes, it is there. Okay, 35AD deductions, all that is there. Then for this total income, no, add back 35AD deduction. Okay, 35AD, 80JJAA, 80QQB, 80RRB, 10AA. These 5 deductions add back if at all you claimed. When you are computing income under optional tax return, you claim all this. You got the total income, right? You compute a tax also under optional tax regime, total tax liability. Now one more working note, AMT related. Total income is there, add this. This is called as adjusted total income. This is called as what? Adjusted total income. If this adjusted total income is more than 20 lakh, 115 JEE section is applicable. Accordingly, what is it? On this adjusted total income, flat 18.5% tax rate. Flat 18.5% tax rate. Remember, in this adjusted total income, special incomes are there, casual incomes are there, lottery, long-term capital gain, everything. Nothing, no, nothing. Straight away, 18.5%. That's alternate minimum tax. Now, if this alternate minimum tax is more than tax liability that you calculated under normal tax regime, gross tax liability you calculated under normal tax is the rate. If AMT is more, then you have to pay AMT by challan and file IT return. Now, whatever AMT tax you paid plus normal tax you have, right, that is called as AMT credit, which can be carried forwarded for 15 assessment years. You can set off this AMT credit in the upcoming years, even though you are paying tax under default tax regime. AMT credit can be set off on the tax liability that you are paying under default tax regime in the future. That is permitted, absolutely not an issue. That's it. Yeah, once the class is complete, I'll share the material link. Okay, once the video is over, I will upload my material. I will upload the material in just a minute. There is a website called Sreshta for CSMA, because no, we have actually not finalized. Another 4 days we are finalizing, because these are the materials which we are doing for May 24 attempt. For May 25 attempt. So some tax rates and all, no, there is a variation which are applicable for May only, not for you. That's the reason why I'm hesitant to share. But rest of the content, conceptual content, is exactly same. So you open our website, open this free resources. Okay, then you just see May 25 onwards, you select here. Then you open P3A, here it will be there. Mostly I will ask my team also to upload it as soon as possible. If at all it is not possible, I will share in our Telegram group. We have a Telegram group, Sreshta Fraternity. There is a fraternity, Sreshta Fraternity Telegram group is there. In the video description is there, Telegram group link is given. Open the Telegram group. Better come to the Telegram group. I will share directly the PDF there happily. Remember, tax rates as per this material are different for January attempt. So that is the reason why I'm hesitant to share with you. That's why I didn't even show that rate to you. Okay, because otherwise day before exam you should not confuse. That's the reason. So AMT point understood, all of you. So if adjusted total income, what is adjusted total income? Total income as per normal tax regime, add back 35AD, 10AA, 80JJAA, QQB, RRB benefits, add back all that. Then you will get adjusted total income. If it is exceeding 20 lakh, then AMT is applicable. Straight away 18.5% plus cess on whatever is there, you pay that. So that is the tax component you have to pay. If that tax is more than normal tax regime, whatever the tax you have, that excess is called as AMT credit. That's it, and which can be carried forwarded for 15 assessment years. So this is the 6th checkpoint, adjusted total income checkpoint, all that. Suppose no total income is there, you added back all this. Adjusted total income is still less than or equal to less than 20 lakhs. You need not worry. AMT will not apply. That's it. Your answer is over. Total income computation I explained you. Tax computation I explained you. All that I explained you. I hope you are clear, all of you. That's it. Now, just 1 minute. Almost 1 hour. Now I will discuss about agriculture income taxation. What is agriculture income? All that I will briefly discuss. It's very easy. Agriculture income, rule 7, 7A, 8, 7B. Most importantly, if agriculture is produced, that agriculture produce is used in business, and we manufacture some other product and sold, that time what to do? This is where many students have confusion. So that also I'm going to clarify you. Almost the time is 8:20. Okay, so maybe another 15 minutes I'll wind up this session. Agriculture income will be over, and once we'll go through the entire, is there anything important point we missed, we'll go through the material. Then uh, 9 o'clock, maybe 20 minutes to half an hour, I'll come back and then start residential status. Okay. Clear, all of you? Yes, now let's begin agriculture income related discussion. Agriculture income related discussion. We all know agriculture income is exempted as per article 246, entry number 82, union list, straight away entry number 82, union list to 7th schedule to article 246, sorry 245 or 246, whatever. Getting it? Entry number 82, central government can levy tax on income except agriculture. So constitutionally itself you cannot levy tax on that. Accordingly, under income tax 10 clause 1, the first clause itself is giving exemption to agriculture income. So what is agriculture income? Agriculture income means 3 types. From agriculture land, if you are getting any rent or any revenue, that's agriculture income. Provided land must be in India, land must be located in India. In exam they'll give you sometimes problems. Land is located outside India. You should never forget about it. You should not you should be very careful about it. If it is land outside India, that is not agriculture income. That is fully taxable. That is fully taxable means aggregation concept, that and all I told no. That and all will not apply. If agriculture land is in India, any income from that is fully exempted. Okay, and the land must be used for agriculture activities. Suppose no, the land I am renting it for shooting purpose, movie shooting and all, no exemption, fully taxable. That income is fully taxable because the revenue is not agriculture activity related. Now the rent is exempted. Income derived from agriculture activity. Suppose you are performing some agriculture activity, for that you are getting some income. What is agriculture activity? Basic operations, subsequent operations, all that. However, farming, dairy farming like milk. Suppose farmers know a farmer is there, who is having so many of buffaloes, cows, sheep, all that. Okay, farm, dairy farm, poultry, livestock, that is not considered as agriculture. But suppose if you are running a nursery, nursery means what? You are selling plants and all, that is treated as agricultural income. Okay, and suppose if you do any process or agriculture produce, suppose you are producing something called tomato, potato, like that, you do some process on it to sell it. Even after doing that process, it is still called as tomato, potato only. It is not called as potato chips. It is not called as cut potatoes. It is not called as potato pieces. It is still called as a potato. Any process you do that do not change the nature of the commodity, we call it as agriculture produce. Okay, then once you are selling agriculture produce, you get some money. Suppose I am actually farming potatoes, I sold potatoes, I got actually how much income? 10 lakhs. 10 lakhs is not agriculture income, minus cultivation expenses, any assets you are using or related depreciation, all that you reduce, then you get some 2 lakhs income. This is net agriculture income. This net agriculture income is exempted under 10 clause 1. This net agriculture income is what? Considered in basic tax computation aggregation purpose. Remember this point. Next. Now, sometimes what happens is, farmer he is doing something called, he is producing something called commercial crops. These commercial crops, they are not 100% agriculture. They will have something called business income also. They will have something called taxable income, non-agricultural also. For that, department has prescribed 3 rules. Department has prescribed directly 3 rules. In all these 3 rules, highest percentage, bigger percentages means agriculture. Smaller percentage means non-agriculture, business income taxable. What is it? Rubber, rubber plants grown and then you are selling it. You are growing rubber, latex, all that and selling it. On that, first you compute, forget about 35-65 rule. First you compute what is the sale value minus cultivation minus depreciation, all other expenses you reduce. Then what is the net income? On the net income, 65% is straight away treated as agriculture. On the net income, 35% is treated as business income. This is coming under PGBP or other sources, whatever. Then suppose you are growing coffee, you are curing it and then selling it. Remember, you are not roasting and grounding. You are just growing the coffee and curing it and then selling it. Straight away, 75% of the net income. 75% of the net income is called as agriculture. 75% of the net income is called as agriculture. 25% of the net income is called as business income. Then coffee roasting and grounding, you are doing so much commercial, means taxable amount will be high. So 40% is business, 60% is only agriculture. For tea, 60, 40. Easy. For rubber, coffee, tea, it's easy. Sir, I am actually producing sugarcane, sir. I am actually producing sugarcane, sir. And that sugarcane, no, some sugarcane I am using it for business, sir. Some sugarcane I am using it for business, sir. Remaining, some sugarcane, no, I am using it in my factory. In the factory, no, I produce sugar, sir. Sugar is not an agriculture produce. Some sugarcane which I produced, I am using it for manufacturing and producing sugar, sir. Now, and some of the sugarcane I am directly selling it, sir. How to calculate agriculture income in this scenario? One problem is there in our ICAI book, which is a wonderful problem. I will straight away go to one problem which is there in the ICAI book. Okay, this is actually very recently I solved in the recent class. Okay. So, what is this? You see, Mr. B growing sugarcane uses the same for manufacturing sugar. Growing sugarcane and selling it directly, happy, no problem. Agriculture income exempted, but you are manufacturing sugar. 30% of the sugarcane produce is sold for 10 lakhs. Oh, sugarcane directly sold. How much sugarcane is directly sold for? 30% of the sugarcane is sold for 10 lakhs. 10 lakhs is gross agriculture income. Remember, it is not net, it is gross. And the cost of cultivation of such means what? 30% sugarcane is 5 lakhs. Oh, so cultivation expenses are 5 lakhs. The cost of cultivation of balanced sugar. Oh, cost of cultivation of balanced 70% sugarcane is 14 lakh. What about the balanced 70% sugarcane? We also don't know. 30% sugarcane is sold directly, 10 lakhs. For that 5 lakhs cultivation is there. So how much is agriculture income? 5 lakhs. Clear? Then now cost of cultivation of balanced sugarcane is how much? 14 lakh. Okay, what he did with that? They are giving you. The market value is 22. Okay, what is the market value? 22. After incurring, look at this word, after incurring 1.5 lakh, in the manufacturing process on the sugar cane, sugar was produced and sold for 25. Compute business income, agriculture income. Fantastic question. You see, okay, so what are they doing here? So after incurring, you see now, sugar cane 30% is sold for 10 lakh. What is the cultivation cost? 5 lakh. This is agriculture income. Sugarcane balance is how much? 70%. This is used for producing sugar. What is the cultivation cost? 14. But what is the market value? 22 lakh. What is the market value? 22 lakh. This is there in the ICAI book, illustration number 1. You go and see ICAI book, it is there. Okay, so what is the market value of the sugar here? What is the market value of it? 22 lakh. Now, sugar he produced and sold, what is the business turnover? 25 lakh. Minus, to get this turnover, I used sugar cane. What is the cost of cultivation? 14. Wrong. That you should not reduce. Market value you should reduce. If agricultural produce is used in a manufacturing purpose, market value on that date, agricultural produce is given in the business, right? On the day, what is the market value? That is treated as cost under PGBP minus further processing cost he incurred. You see, in the question they gave, after incurring 1.5 lakh manufacturing expense, further processing cost is also there. So what is the further processing cost? 1.5 lakh. Balance income is what? 1.5 lakh. This is business income fully taxable. 99% of the students will do 90%. Whoever understand agriculture concept correctly, they will do this answer right. But agriculture income is not fully completed. There is one more point. You transferred some agriculture whose market value 20 lakh to business, right? If at all you sold it directly at 22 lakh in the market, minus that cultivation cost is 14 lakh, net agriculture income is how much? Net agriculture income is 8 lakhs is net agriculture income. This would have been net agriculture income, no? So total agriculture income is what? 13 lakh. 99% students, they will compute only this. Total agriculture income 5 lakh. Wrong. Total agriculture income is 13. Especially this is important if tax computation is also asked. So any agriculture produce transferred to factory. The transfer is also treated as sale. Market value minus cultivation cost is equal to, that is also agriculture income. You transferred, right? Market value is there, right? That is cost in the business purpose. Sale value of the business product minus cost minus further processing, you will get business income. That's it. The answer is over. As simple as such. Clear? just a minute. Somebody is asking. How many hours this video? About 2 hours. This agriculture income concept is over almost. So that's it. So that is also agriculture income. Okay. Now I told you regarding income from growing and manufacturing products. If it is used as raw material in business or factory, market value will be deducted from total income for the purpose of computing business income. Okay, that's it. Easy. Now agriculture income means what? Rent is income. Activities, agriculture activities related income is also agriculture income. Income from farm building should be on the agriculture land. It must be used for either residence or storing agriculture produce, then only it is called as farm building. Land, on the tax should have been paid. Local authority tax, land tax should have been paid. Suppose if land tax is not paid, then the land should be situated in rural area. Rural area means what? It is an area where the population is less than 10,000. Very simple. It is situated in one area where population is less than 10,000. Suppose if it is there in one area or outside the area, within 2 kilometers it is there. Suppose if it is there within the 2 kilometers, from which area? From particular town where population is more than 10,000. Suppose a town is there. Suppose some town is there like this. Your land is situated here. This town population is more than 10,000. More than 10,000. Your land is situated within 2 kilometers. Then hardly anybody can come easily to that land. That's an urban land. Accordingly, on that income from farm building is not an agriculture income. Getting it? That's it. Suppose if the land is situated beyond 2 kilometers. Beyond 2 kilometers. Let's talk about the land only. Forget about the farm building, all that. Okay. Main land point only, because this is important for capital gains also. Suppose my land, after the city, after 2 kilometers it is there, but less than 6 kilometers. Then is this rural land or urban land? Is this agriculture? Is this treated as a rural land or urban land? Look at the town population. If the town population is more than 1 lakh, up to 6 kilometers, any land is there, that is urban land. Simple. Suppose if town population is more than 10 lakh, if the town population is more than 10 lakh, up to 8 kilometers from the limits of the town, any land is there, that's an urban agricultural land. As simple as such. As simple. Repeat the video if you have any. If you have any other doubt. So, sir, in sugarcane using for other purpose. Other purpose means what, Vijay? I didn't get it. Okay. Other purpose. That's what I told. No. Sugarcane user for producing sugar. What else? Sugarcane is used for what other purpose? Manufacturing purpose. That's it. So 8:30 the time right now. I will give you the schedule for the remaining classes also right now itself. Don't worry. Okay. So with this, just a minute. So entire basic concepts is done. Almost major basic concepts is completed. Okay, now you know very well what are the rates of tax per companies, what are the rates of tax per individuals, or rates of tax per societies, rates of tax per, all that is irrelevant. Okay, in PGBP I will tell you anyhow rates of tax per LLPs and forms. In PGBP I will cover section 40p like never before. You would have never imagined in that way, PGBP. So there I will cover. That's it. So rebate, everything is given. So that's it. I think I have covered every point, whatever I have told. No, whatever the checkpoints I have told, I think I have covered every point. Right now, 115 BSc I covered, JE I covered, JC, JD, that's what, nothing but AMT I covered, surcharge I covered, relief I covered, margin relief I covered. Sorry, this is actually rebate. Rebate under 87A I covered, agriculture income I covered, tax computation I covered, unavailed basic exemption limit. Yeah, unavailed basic exemption. What is unavailed? Unutilized basic exemption limit. We know total income will split into 2 parts, right? Total income will split into 2 parts. Normal incomes, special incomes. First identify special incomes. Balancing figure is normal. If I have normal income less than basic exemption limit for resident individual, if your normal incomes are less than basic exemption, suppose my total normal incomes are 1 lakh only, but I have a basic exemption 3 lakhs. 2 lakhs basic exemption is there, right, which you did not utilize that benefit. You can set off it against first long-term capital gain, 20% tax rate. No, that's why first set off with that. Still you have one long term is only 1 lakh is there for you. Still you have 1 more lakh. Set off it with short-term capital gain 111A. Still you have. Ignore it. You can't do anything. You can't do anything. Getting it? You can't set off unutilized basic exemption against 112A 10%. There it is not available. Only for 112 111A unutilized basic exemption can be set off. This unutilized basic exemption limit can be set off with long-term capital gain 1118 whether it is optional tax regime or default tax regime. In both the cases it is permitted. That's it. So if your normal income is less than basic exemption, immediately you should remember unutilized basic exemption concept also. Then coming to 112A, normal long-term capital gains are taxable at 20%. Listed equity shares, listed equity oriented mutual funds and units of business trust where STT is paid. Getting it? So if it is a long-term asset, 112A tax rate is 10% on more than 1 lakh capital gain. 111A straight away flat 15% on the entire short-term capital gain. 115BB winnings, card games, crossword puzzles, betting, any other game of sort 30%. Online games, net winnings 30% tax rate. So entire basic concepts, whatever I promised I covered, and I told you how to solve total income problem. We spent 1 hour 20 minutes and I hope you are clear like never before. To best of my knowledge, I hope you are clear. Then next, give me 20 minutes time. I will start with basic residential status chapter. Actually, no, just 1.5 day, just not yesterday, day before. Yeah, I'm doing in my face-to-face class at actually Chennai. No, there I revised residential status. I actually have a revision, residential status revision, wonderful revision I did. If you're okay with that, now I will put a premiere also. Not an issue. I'll put a premiere also. That's it. Yeah, this live will be there always on the YouTube itself. It will be there. Don't worry at all. The live is there. Now, what is your exact now? There is a group called Staff Fraternity. You see here, this is a Staff Fraternity. I will show you here. You can reach to our group at you can see Telegram SHRESHTAFORCA. You just search with this word, you will find our Staff Fraternity. Inside that, in the main group, I am sharing the basic concepts PDF. Okay, remember in the basic concepts, whatever PDF I'm sharing, this is actually as per new ICAI material for applicable for May. That is the reason I'm hesitant. Any rates of tax and all, if you find something new, ignore that. Conceptual part, if you want to revise, you can revise it. That's it. So now 8:30, right? What is my next schedule? I'm going to come back and tell you. See, what is my next schedule? Okay. Again, 9:15 I will start. From 9:45 up to residential status. I'll go have dinner and come back. You also go have dinner and come back. And if possible, a sincere request to you. You have seen the kind of quality and command I'm giving. Just if possible, share it to your friends also, so that people will get to know and people can clear easily the tomorrow's exam, total income problem, all that. This 1.5 hour, this 1 hour 20 minutes is most important. I'm telling you. Rest of the topics, residential status, PGBP, all that, it's nothing actually. They're all very easy. This is the most complicated topic, solving total income. That itself, I made it so easily. I hope so. And I'll be happy if you put your comments below the video, like if you liked it. Okay, I'll be happy. So 9:15 to 9:45 residential status I will cover. Then 15 minutes break I will take. 10 to 10:30 house property head of income I will cover. Then if possible today itself 11 to 12 PM depending upon the students availability, mood, all that I will see. Okay, PGBP I will cover. 1 hour is enough. Believe me, in PGBP you will get a clarity like never before. Then today we will wind up with 12 o'clock PGBP will wind up. If at all by any reason at 11 o'clock, if at all I'm unable to start PGBP, if at all, because students are also exhausted, 10:30 we will wind up with the house property. Tomorrow morning 8 o'clock or 8:30 or 8:30 we will start PGBP up to 9:30. I'm talking about the other schedule also. Anyhow, in the second part and third part I'll talk about this once again. Okay, so then 10 to 11 salaries I will discuss. After salaries is over, getting it, I need some 2 to 3 hours break, because clubbing and setup and carry forward I can straight away discuss without any material, where I'm telling you, you will get a fantastic clarity, unabsorbed depreciation, everything I will touch, every point I will touch. Getting it? Then TDS and TCS provisions I have already uploaded recently, where I have taken directly from ICAI revision. Just 4 months back for September students I uploaded. TDS, TCS, no amendments at all. That revision you can watch. I will show you what is it. I will share in the group also. Basic concepts is done. Half an hour, just half an hour to 40 minutes. Give me time. I'll come back with residential status. I hope you are enjoying the session. That's it. Okay. Thanks. Have a nice time. Come back by 9:15. Go have dinner and then come back by 9:15, 9:20. We all do it. Okay. That's it.